The worst real estate crash is coming. There's no sugarcoating it, the worst real estate crash in history is on the horizon. And it's going to be ugly. How ugly? Well, for starters, prices are going to plunge by 50% or more in many markets. That's not a typo. We're talking about a halving of home values in some cases. And it's not just prices that will be affected. The entire real estate industry will be turned upside down, with foreclosures and bankruptcies skyrocketing and millions of people losing their homes. So why is this crash happening? And what can you do to protect yourself? Let's get started. Please like, subscribe and turn on the notification button to keep supporting our channel. 1. The worst real estate crash is coming. What you need to know. The real estate market is on the verge of collapse. Home prices are plummeting, and foreclosures are skyrocketing. If you're thinking about buying a home, now is the time to do it. The market is being propped up by low interest rates and easy credit, but that won't last forever. When the market corrects, prices are going to crash. If you're thinking about buying a home, now is the time to do it. Prices are going to plummet, and if you wait too long, you could end up upside down on your mortgage. Now is the time to act. The worst real estate crash is coming. 10 signs that the worst real estate crash is coming. The real estate market has been on a roll for the past few years. However, there are signs that the worst real estate crash is coming. 1. Home prices are rising at an unsustainable rate. 2. More people are taking out mortgages they can't afford. 3. The number of foreclosures is on the rise. 4. The inventory of unsold homes is growing. 5. Mortgage rates are on the rise. 6. The economy is slowing down. 7. Wages are not keeping up with inflation. 8. The stock market is volatile. 9. The housing market is overleveraged. 10. There is a growing number of zombie properties. 3. 5 things you can do to prepare for the worst real estate crash. The U.S. real estate market has been on a tear for the past few years, with prices skyrocketing in many major metropolitan areas. However, there are signs that the market may be cooling off, and some experts are predicting a major crash in the near future. If you're thinking of buying a home, or are already a homeowner, here are 5 things you can do to prepare for the worst. 1. Get out of debt. If you're carrying a lot of debt, now is the time to start paying it down. This will help you free up some cash in case you need to sell your home quickly, and will also make you a more attractive buyer if you're considering purchasing a new home. 2. Build up your savings. Having a healthy savings account will give you a cushion to fall back on if you encounter financial difficulties, or need to make a large purchase. 3. Avoid adjustable rate mortgages. If you're considering taking out a mortgage, make sure you choose a fixed rate loan. With an adjustable rate mortgage, your payments could increase significantly if interest rates rise, putting you at risk of default. 4. Stay diversified. Don't put all your eggs in one basket. If you have most of your net worth tied up in your home, you could be in for a nasty shock if the market crashes. Make sure you diversify your investments so that you're not overly reliant on real estate. 5. Educate yourself. Keep tabs on the real estate market and be aware of the risks involved in buying and selling property. This will help you make more informed decisions and avoid costly mistakes. 4. How to tell if your area is at risk for the worst real estate crash. The real estate market is constantly changing, and it can be difficult to keep up with the latest trends. However, if you're thinking about buying a home, it's important to be aware of the potential risks in your area. One risk to keep in mind is the possibility of a real estate crash. While this is unlikely to happen in every area, it's still important to be aware of the risks. Here are some signs that your area may be at risk for a real estate crash. 1. Home prices are rising quickly. If home prices in your area are rising rapidly, it could be a sign that the market is overheated. This could lead to a sharp price drop if the market corrects itself. 2. There is a lot of new construction. If there is a lot of new construction in your area, it could mean that there is an oversupply of homes. This could lead to prices falling as buyers have more choices. 3. There is a high percentage of buyers using adjustable rate mortgages. If a high percentage of buyers in your area are using adjustable rate mortgages, it could mean that they are stretching themselves financially to buy a home. This could lead to defaults if interest rates rise and they can't afford their payments. 4. There is a high percentage of investment properties. If a high percentage of homes in your area are investment properties, it could mean that the market is being driven by speculation. This could lead to a sharp price drop if the market turns. If you see any of these signs in your area, it's important to be cautious. These factors could increase the risk of a real estate crash, which could lead to big losses for investors. 5. 5 ways to protect your home during the worst real estate crash. The housing market is in a state of flux, and it's hard to know what the future holds. If you're thinking of selling your home, or are worried about a potential crash, there are some things you can do to protect yourself. 1. Get your financial ducks in a row. Before you put your home on the market, make sure your finances are in order. Get a clear picture of your debts and assets, and make sure you have a solid plan for how you'll pay off your mortgage if your home sells for less than you owe. 2. Consider a short sale. If you're underwater on your mortgage, a short sale may be the best option. In a short sale, the bank agrees to accept less than the full amount you owe on the loan. This can help you avoid a foreclosure, and it won't damage your credit as much as a foreclosure would. 3. Don't overprice your home. It's important to price your home realistically, even if you're worried about a crash. If you overprice your home, it could sit on the market for months or even years. And, if there is a crash, your home could lose even more value. 4. Be prepared to negotiate. If you do get an offer on your home, be prepared to negotiate. Buyers will be looking for a deal, and you may need to accept less than your asking price. 5. Have a backup plan. Even if you take all the precautions, there's no guarantee that your home will sell. It's important to have a backup plan in place, whether it's renting out your home, or having a place to stay if you need to move. Selling your home during a housing market crash can be tough, but by taking some precautions, you can protect yourself from the worst of it. 6. How to rebound after the worst real estate crash. The 2007 to 2008 real estate crash devastated many homeowners and investors alike. Families lost their homes, retirement savings were wiped out, and the economy took a huge hit. It's been over a decade since the crash, and the real estate market has finally rebounded. Home prices are on the rise, and more people are buying and selling homes. If you're thinking about getting back into the real estate market, there are a few things you need to keep in mind. Here are some tips for rebounding after the worst real estate crash. 1. Be patient. The real estate market is cyclical, and it takes time for it to rebound after a crash. Don't expect to buy a home and sell it for a profit right away. 2. Research the market. Before you buy or sell a home, research the market carefully. Look at trends in your area and see what kind of prices homes are selling for. 3. Get help from a professional. If you're not sure where to start, get help from a real estate agent or broker. They can help you understand the market and find the right property for you. 4. Have realistic expectations. Remember that the real estate market is volatile. Don't expect to make a fortune in the real estate market, and don't put all your eggs in one basket. 5. Diversify your investments. If you are investing in real estate, diversify your investments. Don't put all your money into one property or one area. By following these tips, you can rebound after the worst real estate crash and make a profit in the real estate market. The bottom line is that the worst real estate crash is coming, and there's not much that we can do to stop it. If you're thinking about buying a home, you might want to wait until the market crashes before doing so. Prices will plummet and you'll be able to get a great deal on a home. Please like, subscribe and turn on the notification button to keep supporting our channel.